Hello and welcome back. I hope you had a good break. We're now going to look at business stakeholders, their objectives and requirements, the impact they have on a business, and their attitudes to risk. Let's start with a definition of stakeholders. A stakeholder is a person with an interest or concern in something, especially a business. We can see a visual representation on the page here. In the blue section in the middle, these are our internal stakeholders, and these consist of the employees and the management, and they're bound to the business via a contract. In the green section, we have some connected stakeholders, our shareholders, who are also known as members, who invest in the company in return for shares. We also have lenders, such as banks, and that's where the business goes to when they require some funding, perhaps in the form of a bank loan. We have our customers in the green section who rely on the business for quality goods and services and value for money, and also suppliers who supply the business perhaps with raw materials for the production of those finished goods. In the yellow section, we have our external stakeholders. We might have press or media who have an interest in the organisation. We have the community surrounding the organisation, the government who are interested in the taxes and the profitability of the organisation. Interest groups would cover groups such as environmental pressure groups, and we have the public authorities such as councils. We can classify our stakeholders into two distinct groups. We have our primary stakeholders and we have secondary stakeholders. Looking at our primary stakeholders, first of all, they usually have some sort of contractual relationship with the business, and they may include investors. They have a contractual relationship with the business in the form of shares. They have paid their own private money in the return for a share of the business. Employees as well would fit into our primary stakeholder category. They have an employment contract with the business. We also have customers and our suppliers bound by payment terms to the business. Our secondary stakeholders will have less engagement with the business and will not directly engage in transactions, but may still influence the relationships with the primary stakeholders. We have an example on the page here. For example, a regulatory body may influence the way in which a business engages with its customers. For example, thinking about the regulatory body for financial services, we have the Bank of England and the FCA, the Financial Conduct Authority. They'll regulate how banks engage with their customers in terms of protecting the consumers, the marketing, and they set the standards within the financial industry. Other secondary stakeholders we may see, we saw earlier in our diagram, the environmental groups and also the community, who have less engagement with the business and no contract. An organisation must have an awareness about who their stakeholders are. They have varying degrees of power and influence over an organisation, and also the decisions it makes. Let's think about this word power and influence. We may have a group of stakeholders that have a high level of power and influence, and these are really important to an organisation. Business activity and strategy must be acceptable to them. If these groups of stakeholders are unhappy, they have the power, they have the influence to do something about it. Perhaps to change what it is you're planning. We then have other groups of stakeholders who might have a low level of power and influence. It will depend on the scenario that we're presented with. So, in your exam, you do have to read the scenario very carefully. You might want to keep those stakeholders with low power and influence informed on what it is you're doing, but very little power to change or influence activity. Let's think about an organisation who wants to introduce shift work. They want their staff to work 24 hours a day, 7 days a week, in order to increase production in the warehouse, to extend working hours, and to produce more for the external market. Those stakeholders with high power and influence in this situation could be the employees if they don't want to work 24/7 shift work. What they could do is group together, strike action, involve unions, and they'll have a high level of power to influence that decision for the organisation. This might compare to two individual residents who live close by to the factory who are worried about the noise and traffic levels at night. It's important to read the scenario in your exam. An organisation will communicate with all of these stakeholders in different ways depending on who they are. For example, with our customers, an organisation will advertise or market their product perhaps via a website or television advertising. With lenders or suppliers, they'll communicate through making payments and sending remittance advices with their payments. The government will communicate with them through our financial returns, our annual accounts, and our financial statements. Our employees will communicate with them via the intranet or email, notice boards, or in person, perhaps in meetings. And then we have our community. We'll communicate with them via our website, press releases, advertising, and community interaction, for example, sponsorship. Let's apply what we have seen here to lecture example 1 on stakeholders. Heather runs a small business located in the countryside next to a reservoir. She has a small nursery that sells indoor and outdoor plants, as well as garden supplies such as soil, trellis, and equipment. For the below stakeholders, state what their interest is in the organisation Heather Limited. What we need to do is choose A, B, C, D, or E from the pick list below. So let's look at the pick list. Profit, market share, and longevity. B, job security, an acceptable wage, and good working conditions. C, they'll be interested in how busy the nursery is, parking availability, and the local area. D, continuity of supply. And E, they may become customers and will want value for money and quality plants. So we need to match these to the stakeholders listed down the page in the box. The first one we've got here are suppliers. They'll be supplying the nursery with plants. So have a quick look through A, B, C, D, and E. The correct answer here would be D. They want to continue supplying Heather with garden plants and equipment. Walkers who visit the area to walk around the reservoir would be E. They may become customers. They might pop into the nursery after they've walked around the reservoir, and they'll want value for money with the plants and quality plants as well. Employees would be interested in job security, an acceptable wage, the payment, and good working conditions. The local community will be interested in how busy the nursery is. Will visitors to the nursery take up parking spaces on their road? And the owner will be interested in how well the business is doing, profit, market share, and longevity. Now we know what stakeholders actually are, we can focus our attention on stakeholder objectives and requirements. There is a difference between objectives and requirements, and you need to be aware of these for your examination. As we've seen, there are numerous stakeholders that are linked to a business. The organisation has the difficult task of managing stakeholder expectations, communicating with them, understanding their objectives and requirements from the business. The business must balance these various requirements and interest. Let's take, for example, Tesco. We'll have a look at two different stakeholders. On the left, we'll look at our shareholders. And on the right-hand side, we'll look at customers. Looking first of all at the expectations of the shareholders, well, they will want share growth. They will want capital growth, an increase in the value of the shares in Tesco over time. Perhaps dividends as well as a return for the risk they've taken in the investment. And longevity. They will want to see Tesco being successful for the long term. Compared to this, the expectations of customers is very different. They will expect value for money. They will expect good quality products and the service they receive when they are in store. In terms of communications, the way the business communicates with different stakeholders will be very different. For our shareholders, it may well be via a letter in the post informing them of perhaps an annual general meeting, which they can also attend. It might be an email with details of the share price or dividends. Communication to customers will tend to be via advertisements on the television. It might be that they are communicating the number of club card points in the post. The objective is what the shareholders would like to see from the business. They want to see the business being successful. They want to see profitability and growth, because in turn this will lead to their investment increasing in value. The objective of customers and what they would like to see: quality, quality services and products, perhaps innovation and new products. And finally, the requirements of the business, what they require from Tesco. They will want a return on their investment. Compared to our customers, what they require from the business: value for money, service, and quality. So we can see here there is a difference between the objective and the requirement. The objective of a stakeholder is what they would like to see from the business, what they're interested in. For example, profitability. The requirement is what the stakeholder requires back from the business. For example, payment. Let's look at this in more detail using the table. Below are different stakeholder groups down the left-hand side. Some of their objectives, what they want to see from the business, are listed in the middle column, and their requirements, what they require from the business, is on the right-hand side. So, looking down the left-hand side, first of all, we have our customers. They want to see good quality products or services, a range of products, and innovation, regularly bringing out new products. The requirement, what they want from the organisation, is value for money and a reliable service. Suppliers who supply the organisation, they want a good relationship with the business. They require on-time payments, perhaps the 3-month credit period needs to be adhered to. They would like regular orders and they want future business. Our finance providers, for example, banks, would like to see a healthy statement of financial position, enough assets as security. And they want prompt payment of interest and capital. They would like to issue further loans in the future to the business. The owners of the business, remember, they are also known as members. These are our shareholders of the business. They want to see the business being successful. They want to see lots of profit in the business. They want to see growth over time and maintenance and control. They require a return on their investment in the form of dividends, and these can be semi-annual, called interim dividends, or final dividends. They will also want to see an increase in the share price in case they sell their shares in the future, and this is called capital growth. The government wants to see a successful business as well. What they require from the business is money from taxes, and they want employment. Employees, think about you in your organisation. You want your business to be a success. You want longevity for the business because the requirement for you is to have that salary, that money coming into your bank at the end of each month. You want job security. You want career progression and training and advancement. Regulatory bodies near the bottom here, they want to see ethical practices within the organisation. Their requirement is adherence to regulations. And finally, the general public, they want to see good corporate social responsibility and a successful business. They require local employment and a nice area to live in. We can see here different stakeholders will have different objectives, and some of these may not be consistent. For example, if we maximise the dividend for shareholders and we also maximise employee remuneration packages, these are in conflict because the more employees are paid, the less money that's available to pay out as a dividend to shareholders. So there might be a conflict of interest. It's a balancing act for the organisation. Another example might be that customers want large superstores with a variety of products and services, perhaps growth and expansion of the store size. There would be a conflict here with environmental pressure groups who want to protect green areas, protect the wildlife and the trees and the flowers. The more supermarkets expand, the less green space there is left. Let's have a look together at the objectives and the requirements of a business in lecture example 2. Complete the objectives, what they want to see from the business, and the requirements, what they require, the return, for 2 distinct stakeholder groups. So our list on the previous page was not an exhaustive list of stakeholders. We can also add managers and pressure groups. So the managers, they are also employees of the organisation and they want to see a successful business. They would like to see profitability, growth and longevity because at the end of the day what they require is their own salary, their remuneration package, job security, perhaps bonuses and career progression. Compared to this, we have environmental pressure groups who would like to see good ethics within an organisation, treating the staff fairly, good corporate social responsibility, perhaps how they interact with the external environment. So the requirement here is that they'll want to require control over waste, control over um, noise pollution, recycling practices, and company policies regarding the above. Hi, let's now look at stakeholders' contribution and impact on the business. So, 2 areas we're looking at here, contribution and also impact. When we talk about contribution, we're looking at what stakeholders can give to an organisation or how they can help an organisation. When we're looking at impact, we need to think about how stakeholders can affect a business and how the business operates. It's important for a business to determine who its key stakeholders are, as they will potentially have an impact on the activities of the business. Stakeholders will invariably have claims on the company. For example, what they want from the company. All groups of stakeholders will have a level of influence over the organisation. The extent of this will affect the impact that they have on the business. Let's look at our stakeholders in turn, starting off with our customers. Customers will buy goods and services from the company. This is the claim on the company. What they want from the company buying goods and services. They want goods and services, they want quality, and they want value for money, as we discussed previously. In return, the company would like repeat business from our customers. It's ideally what they're looking for. It's easier for a company to service existing customers rather than marketing and finding new customers. It's therefore essential that customers are happy with the business and their offering. Customers may leave feedback for a business on the product quality and also the customer service. If the feedback is negative, word of mouth tends to spread, as we've seen before, and it may create reputational damage. The business will want to uphold a good reputation. With the advancement and technology and communications, it's made it a lot easier for customers to leave feedback online, and this is visible to both the business and new potential future customers. Transparency online allows potentially millions of people to review the company's products and services. Customers can therefore influence others by recommending the business, and this can be on a global scale, or they can warn them against the business. The business is impacted by customers in that they must ensure good quality products and services and value for money. Customers therefore have the potential to be key stakeholders and have a big impact on the business. Another stakeholder group are our suppliers. Suppliers provide goods or raw materials or services to the business, and in return, they want to be paid. They want to be paid on time. They want a good relationship with the organisation. They'd like regular orders, and they want future business from the organisation. So that's what the suppliers want from us. It's important for the business to receive good quality materials. This is what the organisation wants. This is so that they can produce good quality end products for the customer. The business will rely on suppliers also for timely deliveries, so there are no issues with production and delivery to the end customer. The business will be impacted if quality is not expected or deliveries are late. Focusing now on our finance providers. For example, banks. Providers of finance are essential for a business if they require funds. The company may require funds to expand the business or develop new products. A business will approach a bank, and it's the decision of that lender whether to provide a loan or not. What finance providers will want is interest on any loans. They'll want to see that the businesses can repay both capital and interest. They may require security on any loans given to the business. The impact of these decisions by the finance providers will be very important for a business. It could determine the future. As accountants, we say cash is king. If there's no loan, there's no cash, there's no money to grow. The owners of a business, remember, are our shareholders, also called members. They own the business and will have shares in the business, depending on the type of share. And as a side note, these could be ordinary shares, they could be preference shares, they could hold voting rights, or they may not. Shareholders may have voting rights. This is what they require from the business. They can help shape the business and determine business activity. They can help with decisions. The company will require funding. the money when they purchase shares, and this will enable the business to start up and grow. Shareholders will have a huge impact on the business as there's a reliance for funding and they can influence the objectives of the business. The government can have a huge impact on an organisation because they set tax levels and this is an expense of the company. So the government want from the business payments of taxes. They can also impact on the business in a positive way. They can provide the company perhaps with grants or funding. So, a key stakeholder. We have to pay our taxes, we have to pay our accounts, we don't argue with government. In terms of our employees, they work for the business. In return, they will expect a salary. Sometimes other benefits too. For example, a pension or a bonus or medical care. They'll also want job security. Day to day employees will have minimal impact, minimal input into the decision making of the company. So, individually, minimal impact. The impact, however, that employees have on a business may change over time or depending on how many of them there are. So, it's important that we monitor employees. If employees become disgruntled, they might refuse to work or not work as well as they should do, and union advice may be sought. They may get together, and this will have a bigger impact on the organisation. So, stakeholders can change in terms of their influence and the impact they have on a business. Individually, with employees, very low impact, but en masse and all together, a high impact. Union activity, perhaps go slows at work. Here we look at regulatory or professional bodies. What they want is compliance with standards. A company or an individual will want recognition in return. For example, think about your AAT qualification, AAT technician, or a plumber perhaps qualifying in a gas safe qualification. Regulatory bodies have a large impact on a business. They ensure compliance, they oversee knowledge and skills and conduct. They're a key stakeholder. And finally, we've got the general public. What the general public want from a business will depend on who they actually are. We've seen already that general public, they might work for the organisation, so they would fit under the category of employees. It could be they're a local resident. If many residents are impacted in a negative way, they might protest or object through the local council or the local press. There may, however, be a positive impact, buying products or services or working at the business, in which case they would be a customer of the business. Let's have a look at lecture example 3 on stakeholders. In this example, what we need to do is match the stakeholders, and here we have the pressure groups and managers of the business with the impact they might have on the right hand side. So the stakeholders we've got here are pressure groups and the managers. In terms of the impact of a pressure group, well, a pressure group may influence the decisions of an organisation. Do they make recommendations regarding the direction of the business? They don't really. So let's have a look at the other one. They impact